Hello and welcome back to Coin Bureau. Now it is a new year, so there's a lot of time to think about your portfolio adjustments and how to operate for the rest of the year. Joining me to dissect everything that we've seen in recent years and also where it stands moving forward, looking through the looking glass, Alex Faisal, Chief Partnership Officer at Swissborg. Alex, thanks for joining me today. Happy New Year.
So Happy New Year 2024. Wish you nothing but the best in terms of health, wealth, and happiness.
And the markets and our portfolios.
In our portfolios, for sure. Now, I'm really, really happy to be with you. And as I always tell you, Jess, I feel like you and Guy are absolute amazing ambassadors, diplomatic, elegant, and I think we're really lucky to have you with us.
Thank you so much. So we're also here today, and we're really lucky because we get to pick your brains. Also, the Swissborg end-of-year report, looking ahead to 2024 and beyond. So we have to dive in. But first of all, before we do, maybe a little bit of context to your background in crypto and also kind of Swissborg as of today, 750,000 verified users, the fintech platform. Talk us through a little bit of an introduction just for our viewers.
Oh, thank you so much, Jess. Yeah, but listen, it's been like for everyone, we've been between heaven and hell, right? Overnight, it changes. And I'm absolutely blessed to be in an industry that I believe is changing the world. And I believe there are very few chances when it comes to cycles on how often you can take advantage and really try to build something meaningful, the greater good that will change the way society operates as of today. So very, very lucky, I would say very fortunate. And today, what I really wanted to do, Jess, is bring lots of very great findings, research, data, but also a few stories of mine because we're talking about cycles. And I remember myself, I've been through 3 cycles now since 2016, 3 major cycles. And the first cycle, Jess, as a newbie, I got absolutely wrecked. So I would love to share some of the stories on what happened, what went wrong. And I think hopefully today we can share some tips for the newbies who are coming in this cycle to not get wrecked. That's the number one. Number 2 cycle, I did a lot better, but there's still a lot of mistakes that I made. And I feel like, the more mistakes we make and the more we reflect on them, the more we can provide value. So I'm super pumped to share more about this cycle.
Psyched for the cycle.
Psyched, yeah. That's what I was thinking. I'm super psyched to share more about this cycle.
So let's talk through market cycles as well, because as we know, kind of history doesn't repeat, but it certainly does rhyme a little bit. And for those that have experienced a few market cycles, we can kind of have this feeling of, this feels familiar. It feels like we've been here before. So I think the $1 million question to start with is, where are we at currently? Based on the data that you have, your Swissborg and 2024 report, where are we at currently, in your opinion, in market cycles?
Yeah, it's a really good question. And I must say that this is based on my personal analysis, my personal experiences, but also, Jess, I really like to read those who really understand cycles in the world. So Ray Dalio, with regards to political, geopolitical, economic cycles, is an absolute genius. When it comes to financial market cycles, I've read the book about cycles written by Howard Marks, which is a really, really good book to look into. And there are other books like This Time is Different, which we can talk about maybe later, that also talk about, all the 800 years of cycles. But with regards to crypto market cycle specifically, a lot of people talk about the bull and bear cycle, which to me is way too general and vague. But then there's some people who look at cycles, within 12 steps, 10 to 12 steps. You're like, wow, this is way too complicated as a framework. So the cycle framework that I like the most is called the Wyckoff cycle. It's only 4 steps.
Okay.
And why do I love 4 steps? Because it reminds me of the cycle that we're the most used to, which is seasons. 4 seasons, right?
Okay.
So you have essentially a spring period, and I like to call spring essentially the accumulation phase. So in terms of actions here, we're really looking at planting seeds, right? And we can talk about specific investment strategies later. So that's spring accumulation. Then we move into summer, which I think we're in the early days of summer as of today.
Interesting.
And we call those the markup stages. And the markup stages have usually 3 sub-stages. So you'll have the early stage of the markup, which I believe we're in the early stage right now, the mid and the late. And then the third season, obviously, after summer comes autumn or fall if you're American. And that happens to be a shorter cycle where there is some sort of, we've leveled off, right? And the 4th cycle is winter, of course, the cycle that we hate the most, which is brutal in crypto. And what I've noticed, Jess, when you compare this traditional Wyckoff market cycles and what we see in crypto is one of the greatest findings I've realized from 2016 to now is the first market was hyper volatile. Like the volatility and the drawdown and how fast it falls is worse than the Great Depression, which is the worst cycle in the history of mankind, literally putting people on the streets, right? It was a really bad time in the US in 1929 after the Wall Street crisis. And that's really one of the key points. One of the first learnings I would say, Jess, is we're going through hyper volatility.
Yeah.
And that's why it's so tough on us as investors. And one thing that's really interesting in terms of the 4 seasons is in crypto, we don't really have a fall and autumn. You go from summer to winter overnight. So you're like literally on top of the world, you're dancing in heaven, and then all of a sudden you fall and you get, these pullbacks, which are minus 80, 90, 93%, which is brutal.
It is. Once you've had a few crypto winters, you understand the pain. I feel like I age about 3 years in one crypto winter. I'm like, guys, I'm exhausted. So let's talk about the risks, because everyone does say, and we acknowledge, crypto is a risky industry. And as you mentioned there, we've got the fact that you can move from a crypto summer, which is, as you've mentioned, where you're kind of the rainbows and butterflies, portfolios are moving, past spring, which is the accumulation phase, to the crypto winter, which you don't know how long it lasts typically. What do the previous seasons and cycles, what do they tell us about maybe the duration of this crypto summer that we're in now, and when to expect as moving into crypto winter?
Now, that's a brilliant question, Jess, for two reasons. Number one, understanding the timeframes and the seasons is critical to have a strategy.
Yeah.
But number two, the specific timeframes between these 4 stages have changed. So what we're seeing now is the bear cycles used to be brutally long, right? Like you remember crypto winter, it was over 2 years, which is the second longest bear cycle in financial history. So the longest was 3 years.
Yeah.
So that's how brutal. And the drawdown was more brutal than, as we were saying, the Great Depression. So bear cycles are getting a little bit shorter while the bull cycles are extending. That's one pattern that we notice in the 3 last major cycles. But another one, Jess, which I believe is going to change this time around, is remember we were saying how we don't have autumn and fall, and that's why we get wrecked, because overnight, we lose all of our funds and the value of our assets. I believe, Jess, my personal prediction is we will have a top off this time. I don't believe the cycles will be as volatile because more liquidity is being injected.
Yes.
And that's why I'm going back to the 4 seasons, is because I think we may have a short fall or autumn this time.
Okay.
And not just an immediate retracement like within weeks.
And that would make sense, because as of the time of us bringing you guys this video, just 1 week ago, we saw spot Bitcoin ETFs approved across 12 different applications. So obviously we saw the capital inflows from that as well. So we're seeing a change in dynamic in 2024 as well. Does that also mean, based on your guys' predictions and outlooks, it could be a less volatile year for crypto?
100%. And I think that's one of the key findings. It's less volatile. So we'll probably have, 4 stages of the cycle. And as we're saying as well, Jess, so like the bull cycle of 2017-18 was roughly 9 months. The last bull cycle was roughly 12 months. When I talk about the markup stages, so summer specifically.
Yeah.
So it could be 15 to 18 months for the current cycle, because those summer seasons are extending.
We interrupt this programme for an emergency crypto weather forecast. Get ready for a whirlwind of savings. We're seeing some high-pressure sign-up bonus systems forming in the northeast. In the south, we'll be seeing some heavy discounts on hardware wallets, so watch out for those if you're going to be out and about. And then in central areas, there's a high chance of trading fee discounts, which should be settling in later on, so be on the lookout for up to 60% off there. Lush! For a more comprehensive forecast, just visit coinbuilder.com/deals or use the link down in the description. These deals are red hot, so make sure to take all the necessary precautions. Well, that's all for today's forecast. Now back to the scheduled programme.
So now let's look at tokens, and I want to pick your brain a little bit as well. We've got some tokens behind us, but these are more of the familiar ones. And I think for a lot of people that are looking to start their investment journey in 2024, they might look at the price of Bitcoin hovering around $43,000 at the time that we're recording and say, has Bitcoin had its day? Is it too expensive to get into? What about these riskier coins? So when it comes to someone like Swissborg that has provided a crypto report that obviously breaks down the different risk elements of all of these different tokens, what's your outlook for someone new looking to get involved risk management.
And you mentioned something really important, risk management. First thing is everyone needs to understand their own risk appetite.
Yeah.
That is something that most people do not do. So once you understand how much risk you're willing to take, and you really study that in numbers, you quantify it. I'm going to invest this amount. This is my target. I won't stay away from my target. I won't let emotions interfere. And you apply that within your limit orders. You actually not just understand the theory, but you apply it. That's a key point. And I think one thing, Jess, is risk, as it's defined, is completely arbitrary and completely biased. So I'll give you guys an example.
Okay.
Right? So imagine you're at the gym and you're working out with these water dumbbells, right? That's not necessarily super risky, right? But when you're bench pressing or you're preparing for a marathon, a triathlon, it's a lot riskier because you may hurt a muscle, right? Relative to the guy who's just doing jumping jacks, right?
Got it.
So I think that the most important thing we need to understand, and even we love ice baths, right? So when, for example, we'll do an ice bath, we'll do what is called calculated risk.
Yes.
Because you understand your body, but you also have clear metrics to go on risk. So what is the temperature of this water? Maybe I'm going to start with an 8 degree, and then a 6 degree bath, and then a 5, and then a 3 degrees, right? So you're going now with metrics, which we're doing today, right?
Yes.
So how low would you go? And here we'll talk about how high will we go in terms of total market capitalization. But the second point is you probably know how long you want to stay in that bath,
Yes.
right? So maybe 2 minutes for beginners, get out. The coach will tell you, okay, you can now you can probably do 4 minutes or 5 minutes. So you'll have the time and the temperature. And that's what we're doing today in terms of calculating the risk. We need to understand how long the cycles are, that's the time, and how high we go in terms of market capitalization. So you see my kind of comparison there.
That is a really great analogy, actually, for a lot of people. There's probably been a little bit of a eureka moment there. So let's look at the quantitative data that you guys have provided in the report when it comes to where we are. You mentioned kind of market caps as well. What are you looking at in terms of potentially the end of the crypto summit, or maybe just exit points for specific tokens? How are you guys viewing it?
Yeah, it's a great question. So once we understand our own risk appetite, it's good to understand the market's appetite for risk. And what happens usually, Jess, is people, they dive into Bitcoin because it's the least risky. And why do they consider Bitcoin the least risky? There's a track record, but we look at market caps. So a mega cap token is a token that has over $200 billion of market capitalization.
Okay.
So that could be Bitcoin and sometimes Ethereum, right? So you go from mega cap to large cap to mid cap, all the way down to micro caps. And micro caps is, we're talking about tokens that have less than $30 million valuation.
Wow, okay.
And why do we connect the market caps with risk is because the lower you go, the lower volume and liquidity there is. So that's one of the reasons why they're considered higher risk.
So they're more vulnerable to buy-ins, but also to sell-offs as well.
Exactly. Super volatile. It could pump in triple digit, over a week, but it could also go down double digits over 2-3 days, right?
Yeah, and I think that's important for our viewers to know as well, because a lot, especially on crypto Twitter or X now, you do see a lot of how to make a 100x coin, but those go both ways. What comes up sometimes comes down, and even worse than before. So it is also good for you to note that for the kind of micro caps and volatile tokens, there is a lot more risk that's involved.
And that is key advice right there, what you said. So what goes up must come down. So that is extremely important. I'd love to zoom into that. So what the market does is they kick off with the mega caps, right?
Yeah.
And then liquidity flows down and it will stop based on your risk tolerance. Some of the institutions, they'll be like, we're just going to touch the layer 0, 1, 2s. We'll stop at under avalanche. That's too much for our risk appetite, our tolerance. But those like us who've been beat up, through multiple markets, literally have developed a disease called bipolarity.
We're ready, guys.
Over the time, right? With the mood swings. I'm very happy to go down to microcap. So for me, essentially, what I'll do, depending on the cycles, is go from, I don't even start with the mega caps. I go straight into large caps. I'm willing to take that risk. In the accumulation phase, I was accumulating Solana and Avalanche rather than Bitcoin. Bitcoin, I just hodl and I just leave it. I don't trade it.
Yeah.
But depending on your risk appetite, you can see, right, Jess? Most people go from mega cap and then stop at their risk tolerance. I don't mind starting at a lower level in terms of higher risk and then going all the way down to the micros, because I feel like I have the fundamental analysis tools to do so.
Okay, awesome. So we've covered kind of the overview. Is there any examples that you can give us that some of our audience can dive into?
Yeah, absolutely. So what I would do is, if you want to start with higher caps, so lower risk, right, at the beginning of the bull cycle,
Yeah.
I would say choose your favorite layer 0, 1, and 2 blockchains,
Okay.
right? Because they have more capitalization, they have more liquidity, so they're less volatile, right? So for example, I think Avalanche, AVAX, is an undervalued token relative to fundamentals.
Okay.
And I like the development, I like the on-chain statistics. So I'm going to say, okay, Avalanche, AVAX is one coin that I want to hold in this cycle. Now, if I want to take more risk and going down in terms of market cap, which sector or asset class am I interested in? To me, as a fundamentalist, I'll look at the DEXs, or I'll look at liquid staking pools, LST tokens, like Lido did for Ethereum. And the reason why is the DEXs and the LSTs fundamentally make the most revenues. They're the best use case on DeFi, so they'll be a lot more sustainable, right? They have budget. They'll never run out of treasury, at least for now. So I would go from, for example, Avalanche to Trader Joe, right? Or Joe token.
Yeah.
And then if you want to explore even lower, there are, for example, some micro nano caps like GoGo Pool, which is a LST. There are some Launchpad tokens, and Launchpads do really well in bull cycles because everyone gets excited. They just want to throw money. They want to see that 10, 15, 20x, or even 100, as you were saying earlier, right? So Launchpad tokens, I think, they perform really well in a bull cycle, a lot less in a bear cycle. So they're very seasonal. So that's a good example. I think that's a good way of thinking of it. Okay, choose your blockchain. If you don't want Avalanche and you want Solana, then you can go down to Orca or Radium, and then you can go down to crazy stuff as far as even meme coins like Bonk, right?
Yeah.
Depending on your risk appetite. I don't touch meme coins.
Not financial advice.
Not financial advice, yeah.
That's a really good way for people to break it down and also stay focused, because it is a clouded space on CoinMarketCap. There's thousands upon thousands of different tokens. So it's quite a good way. And then just, you mentioned Launchpad there, so maybe just a little bit of an indication when it comes to maybe just how to navigate the Launchpad space, because that's a whole, could be a whole other video on its own. But just kind of quickly, maybe a few words of advice from a seasoned Launchpad overview, what you'd keep an eye out for.
Yeah, absolutely. I mean, I think some of the launch pads like CDeFi have very strong tokenomics, you know, where it's just clearly like how much you stake in a pool will give you a percentage of the airdrops, will also give you a percentage of how much you can invest in a project. But I like to see, for me, Jess, launch pads that have survived a cycle, just because I think as we're doing today, right, all of the findings we have for the people out there is based on 3 cycles. That's a long time in crypto, right?
Yeah.
Crypto years. We're worse than cat years, right? And so, and for those reasons, I like to see a launchpad that's been around, that's survived a cycle.
Yeah.
I think one thing that's really important is to make sure what their treasury is like, how many employees. You can even get people to sign NDAs, jump on a call. I know that's a bit extreme in terms of due diligence, but I like to take those measures to make sure they still have a team, meet the team if possible, or watch them online, talk to them on Discord, try to find out about their treasury, their burn. So a lot of fundamental deep diving, but I would say go for the ones that have been and the one reason why I also say that is not just their experience, but I think if you've been here in the second cycle, people will remember you.
Yeah,
so the hotter projects will likely go to kind of defined or proven launchpad rather than a new guy just creating a project overnight. Yeah.
So we will link the report for everyone to have a bit of a deeper dive into if they have found the video interesting. Obviously, we've talked about the kind of the quantitative data that has helped indicate and shape your outlook for this year. There is also the other side, which is the kind of the gut feelings, the instincts, the things that we see, for example, Elon Musk in 2021 on Saturday Night Live talking about Dogecoin. There is the taxi driver indicator that we spoke about off air, which is the feeling you get in market sentiment based on the ground feelings, media coverage, for example. What does that tell us about market cycles?
This is such an important question, right? Because it's not just all data, which, by the way, the gut feeling is actually data, right? Because your eye has processed so much data on this part of your body that it is also data related, right? So it's less of a feeling, but actually has facts to it. But just to summarize what we're talking about quantitative is, guys, the bull market, if it started in October last year, and we have 15 months, this gives us a specific deadline around Jan 2025. Some people see it extending all the way until April, May 2025, go a little bit longer than 15 months. But just keep that in mind, guys, because you have to start taking profits. If you've gone down to the micro caps, don't forget to come back, as you say, and go either into stables if you want to buy real estate or whatever goal you have, buy a car, a nice whatever. But don't forget to come back from the nano caps is one. The cycle, is it between 15 to 18 months? We don't know, but just keep that in mind. And the second metric is, on a quantitative basis, is the previous total market capitalization was $3 trillion, right?
Yep.
And based on how the total market capitalization is going up, the next cycle, I see it personally, and most people who are writing the reports see it between $6 trillion US all the way up to $8 trillion US. Some people see 10 trillion. I think that's a bit too much. I'd rather stay a bit conservative. But that is roughly anywhere between a 2 to 4 times the total market capitalization from the previous all-time high. So I would just say, guys, if you see total market capitalization above 6 trillion, start thinking as well. So just as we talked about timing, but also like how high we've gone.
Because you're right, it's very easy to get into crypto, but actually to remind yourself to get out, there is a euphoric sentiment. When markets are up, you can't ever imagine markets going back down. And if you don't take profits, you can get left behind.
Yes, Jess. And that's the hardest sentiment and feeling to fight. And the reason being is because there's no track record. It's easier to buy at a low because you have so much data to look at. But here you're exploring new waters, right? And so for those reasons, we don't know when it's going to end, right?
Yeah.
So, but should I go back to the gut feeling?
Yeah. Let's go back to the gut feeling.
So gut feeling, I'll give you guys a clear example, short story of the first market cycle. I remember there was a coin, Jess, called Denta coin, which is a dentistry on the blockchain, which is a bit far-fetched, right? And that hit over hundreds of millions of dollars of market capitalization. And a friend of mine told me, I'm out. This is becoming, as you said, euphorious, delirious. So one thing to look at is how overly optimistic and the excessive capital that's going into completely bizarre ideas.
Yeah.
That's one key gut feeling. And in the second market, there was on Cosmos some sort of platform called Wonder something, where you could earn triple-digit APY in a single day. So 100+% of staking in terms of just printing unlimited tokens.
Yeah.
That to me in the second cycle was a huge red flag. And I have messages on Twitter saying, this is the end of the bull cycle. You have projects, complete vaporware at over $1 billion unicorn status on top of triple-digit APY. This is not looking good. And so second cycle, because I was aware of that, once again, excess of capital and completely bizarre ideas like, the dental coin. Those are huge flags, right?
Yes.
What about the taxi indicator?
So also, yes, taxi indicator. So I was back in the UK for Christmas, and I always use the indicator of speaking to taxi drivers about crypto, whether it's here in Dubai, whether it's over in Europe, or back in the UK. And British taxi drivers love crypto. But you can tell with the market sentiment when people are, is crypto a scam? I've just read some really bad TradFi articles about how people have lost loads of money, and hasn't this guy that has this exchange, isn't he going to court? That's bear market, or they just haven't heard of crypto. When you get your mum's friend or your taxi driver start to ask you about crypto, that's when you're like, okay, we're at the start of the bear market, bull market, something's picking up, something's definitely heating up. And then you get to the point where you'll get people calling and messaging you saying, what NFTs or meme coin should I buy? And then you are in crypto summer, as you like to call it.
That is a proper rear. That's the real sirens, right? And I think the problems from that is within our community, they're under that unicorn rainbows and cute, sheep, type mentality of, Bitcoin has reached 65, next stop 150K. So we're overly optimistic, but then the media echoes us, right? So CNN or Bloomberg or CNBC will talk about new all-time highs almost every single day.
Yeah.
So it's a combination of those within our community and outside of our community that are just sending these messages at the wrong time to the masses.
Fantastic. Well, Alex, really enjoyed the conversation because I think we've unpacked so much here. The report has a lot of value as well, so I would advise anyone to go and download that and take a little bit of a look. It is a 100-page pure alpha deep dive. But thank you for the conversation.
Thank you so much for having me.
We'll have to catch up a few more times over the course of this crypto summer and see how things go. But thank you for your time today, Alex.
Thank you so much, Jess. You're amazing.
Thank you.